trading warrior brothers and sisters. Anyone who does this, attempts it, I have respect for them because it's a really difficult endeavor and you really have to have a commitment to it. You have to put in the time to do it and you have to live through adversity to make it. You can't really look for any secret because the secret is hard work. And I have one of the hardest working guys here with me. Michael Venezia is with me today, who puts in the time and is prepared for the markets. It's a philosophy that I have. But before we get to Mike, I just want to give you a quick rundown of what I'm seeing. So, starting off with the S&Ps, they're trying to hold here. I still think because of this confirmed high that we're going to blow off to new highs. So, how do I come up with a target? This kind of downtrend line of what could be a flag if I went to a longer term time frame comes in right around the 34.85 level and then checking this downtrend line not too far away, call it 35. So if you just take the high here at 35.50 and then the low here, which was 34.20, that's 130 handles. So if we break out over this 34.80 and you tack on 130 handles, it's going to give you 36.17, 36.20 in that area. I still think there's a likelihood that it's going to happen. I don't know if it's going to be deal driven. I think that would help. But it looks like we're still going to challenge the bears, and the bears are really going to have to defend this area to reject it. Otherwise, new highs are at hand. Part of my narrative for this happening was the dollar weakness stimulating the upside of almost all asset classes. S&Ps are up, but as I was forecasting over the past week or so, I thought that gold was going to have one more good push up towards 1940, 1960 before the correction ensued. So here we are. This is manifesting. And silver, I think, can push up to this 26 area. The 200-day moving average is coming in a little bit above this high, so looking for a stop hunt at new highs. When that occurs, I've been talking gold-silver ratio, which is important for trade selection in the metals for me. And I still think that this is a corrective move. And once this bottoms in here, I'm looking for a rally. I'm looking for this major decline in the gold silver ratio to retrace. And, for it to retrace back to here is a minimum type correction in a bear market. That'd be 38%. And if you recall what happened during this phase right here is silver really got smashed compared to gold. They both worked, but it's kind of like EG. EG gives me my preferred longs and shorts in in euro and cable. And the last thing I want to touch on, I did start nibbling at the dollar. It's a scale in trade for me. I'm long for 66. I thought that we could hit this blue line. Here's your daily. We haven't done it yet. If I go the 4 hour, let's see where it's coming in. It's falling off the chart. It's coming in around 92.40 in here, which is close to 78.6 back. And the way I'm going to approach a trade is scale in. And I'm wrong under the low of the move, under 91.74. I still think that once we turn back up, will be kind of coincide with a high in the S&Ps. The end terminate the rally in the metals. So the dollar is important. If I'm wrong, gold's going to new highs and the dollar bears. I do know that the funds, the hedge funds, they have big bearish dollar bets right now. And if I'm right, that's going to fuel this bear market rally back to 95.5 to 97. Any questions on that? On what I'm looking at? Okay, everyone with me on it? The metals, the dollar, the S&Ps. There's more that I cover. Oh, and one other correlation, and write this down. U.S. dollar yen. This is Dale Pinkert. Keep watching the full video at TradeGATEHub.com.